We're going live on YouTube. Just an FYI to everybody. Create a little awareness on a Friday. Hello, YouTubers, stock twitters. This is Bagadon, Stock Market Caddy, and just a polite reminder. Um, you are watching a live view of our Zoom broadcast to our members, and YouTube um, throttles back the image. So you want to upgrade your image to the highest setting you can get, which I think is 750. Our Zoom broadcast is 1080p or higher, high def, and you're also on at like a 45-second delay. So when we do these live sessions, we're not trying to prove anything. We're not trying to hand out the fish. We're not trying to do any of that. We're just trying to give you a glimpse of what it is we do and what we're doing and how we go about it. It's just a glimpse. We have a gentleman going to maintain his privacy who is in our Q school right now. And we were together this morning. And this is the view that he has as he is doing his own trading. And you might say he might be trying to beat the machine, so to speak, but it is what it is. He's just getting acclimated for a few days. The trade that you see in the upper left-hand corner was put in by the machine. I'm not putting in the trades. If I do intervene and take a profit, I will let you know, but I won't be putting in any trade. The program is, in fact, running Swing Machine today. And it's been modified in that it's only running, the 1 minute is only going to take longs. If it gets a short signal, it will come out. Now, if the market should roll over and do something different on the 5 minute and the 5 minute gets short, then we might come back in, we might program the 1 minute to only take the shorts. Now, our person who's in the Q school, who's been trading, one of the discussions that we had this morning was, what are the average payouts? What can I expect? Right? It's a very good question. In fact, everybody should know, whatever it is you're trading, you should know or have an expectation of how much money you might make and or how much money you might lose. And hopefully it's based on something than a pig and a poke. So what we did, we can't do it here, but we went back over the last 2 weeks. And the 1 minute strategy on the ES, if it was 2 minute, it'd be different, but the 1 minute, which is what we're asking him to shadow, is the average winning trade was $395. So we're already up 300. So he knows that now. We didn't tell him. I forget when he started. Was it really? Yeah, it was really this week. We didn't tell him at the beginning of the week. We gave him a different view. We peel back the onion slowly over 3-4 weeks. And it's 3+ weeks, right? So we work around a person's schedule. The average loss is 140. The average run up, I think, is about the same. I could be mixing up the numbers, and the average run down is about 175. So safe to say you're risking, probably about, $200 to try to make $500 or more. Now we've had over the last couple of weeks, there've been some tremendous positive outliers, really some nice stuff. And then down below, we have this cheat. This has a paint bar to it, by the way. The paint bar is matching the radar, Swing Machine, the paint bar. So here are the strategies. And then we have, this is a 5 minute view with the paint bar. So you can see visually the color of the 5 minute, but it matches the radar. Radar Swing Machine, you might think of it as a chart. So if you've been accustomed to looking at charts and you start to get a case of vertigo, that's where Swing Machine talks to you in English and gives a lot of information out. Thus far today, I think we turned this on 8:30 maybe. So we had a run up in the account higher, probably 15, 1600, but we have 984 in the house, so to speak. If you have any questions on YouTube, feel free to post in the chat. I'm just going to be here doing some other things. And Friday is kind of a wind down day for us. Most of our traders will be done. We try to finish our day by 3. No, really, ideally, no trading after 3. We try to finish early, and for the week, we try to finish so that we're not trading on Friday. If you find yourself trading on a Friday, trying to catch up for a bad week, that's not really so good, because then you go into the weekend angry and upset. Is it possible to see these algos performing over a longer term period? I mean, past performance stats. That's a really good question, Mr. Chaudhry. Yes, right. In fact, we did it. We were reviewing 2 weeks. We can go back 6 weeks. We could go back years. It's a very small time frame here, so 1 minute. Let me address something though. Okay, so I get a little bit concerned. I understand where the question comes from. It's a very conventional question, and it's kind of conventional mantra, performance, right? So let me take this as an opportunity to introduce myself and answer that question. First thing is, I'm not a broker. I'm not a financial advisor. Okay, so we're not making specific recommendations to buy or sell any security. Also, I'm not making any claims whatsoever on any of our programs or anything that a person's automatically going to be successful. Okay, so I want to state that. I spent my career, my normal career, started in 1981. From 1981 to 2002, 2004, thereabouts, teaching surgeons how to do surgery. So pretty far removed. Always had an interest in the markets, though. My wife worked for IBM during about that same period. In the early 2000s, we built these tools, and we've been trading full-time our own bread all this time. Stock Market Caddy came out of the ground in 2011, 2012. Okay, so that said, performance. We have, being around tells me everything works sometime, nothing works all the time. No offense. Oh, no. I understand. No offense to you. I don't. No, I understand. Yes. So the gentleman asked, for the benefit of folks that are here in the room and might be coming through, he asked the question, which is a good question. And I used to ask this question too. And I used to ask other things too. And I kind of share that. And the question is, what is the performance? So Wall Street gives, there's a lot of urban myths, a lot of lies that come out of Wall Street. But there is one statement that comes out of Wall Street that is true, and it's accurate. Now, you're going to be familiar with this statement, and people mumble through it a lot of times, the what I call the stock pimps. And you may perceive that comment to be just boilerplate disclaimer, but it isn't. It's a very important statement. And that statement is, what's happened in the past may or may not happen in the future. So what's happened in the past may or may not happen in the future. And so, and it's accurate. It's absolutely true. It's absolutely true. So we do back tests, right? We do back tests. We will, now when we're trading, a small increment, we don't go too far back. But so what does that mean exactly? What does that mean to you? So let me try to relate this. because it is a disclaimer of sorts, but it's much more than that if you think it through. Let's equate it to golf because stock market caddy, right? I have a particular golf course that I like to play. I play it quite a bit. The likelihood that that golf ball is going to land on exactly the same place on every single hole, exactly the same, you know, the same conditions, the same is slim and none. Not going to happen. That golf ball is, it might get close to one, but it's never going to do that. It isn't going to do that. So the strategies, and this is why I don't promote. I'm happy to, by the way, if you as a monthly member, we give you a hall pass to come in and to watch what we're doing, and I'll peel back the curtain and give you a better, more detailed view than we'll do on YouTube, because I want to make sure that folks understand. But so we're not promoting a performance report, right? Because I'm not managing money. I'm not trying to get anybody's money to manage. Mutual funds got to do that. Somebody else has got to, if they're trying to, that's what they're doing. We're a mentoring site. So, but the other piece is too, from a robotic mechanical trading standpoint, I've been asked this question, Don, we do back tests. And you look at the reports and you do it. Well, why do you do that? If you say and believe what's happened in the past may or may not happen in the future, then that back test is meaningless. Well, that's not true. That isn't true. A back test is very important. And the reason for that is, but what's born from that question or that perception is a fundamental, not to you, Mr. Chaudhry, I'm saying it in general. I think Mr. Chaudhry understands this, that it's born from a misunderstanding or an expectation that back test, oh, that means that's what I'm going to do. No, we don't even use that back test that way ourselves. We use the back test as a means of managing the trading that's ongoing now, and we measure our performance against the back test. Give you a for instance. Let's say I have a strategy and I have profit targets on there and I have stop losses, and by the way, the more things that are put into a strategy, you run the risk of what is called a curve fit. The computer will go back in time with all those permutations, and by the way, I am going to intervene in this strategy here in a moment. I know the average payout is $300. I know the average payout is $300 for the trade that just went in by the machine. We had a nice run up. We ran up more than that. I see a little bit of selling right here on the ball flight. So I just intervened and I took that trade. Okay. So we'll cycle through and hopefully get the next one. So kind of lost my thought where I was. We will measure our performance against the back test. So say we have I was talking about a curve fit too. So you run the risk of a curve fit anytime. So the fewer the variables, maybe the more meaningful the back test. But you'll know, and this is one of the things that we do in great detail during the Q School, is to understand how to do these back tests, understand how to read those back tests, and then understand how to manage them. And then also TradeStation has something called a forward test. And we can take that same file that has tens of hundreds of thousands of tests, plug it into something that only TradeStation has called a walk forward optimizer, and it randomizes that data. And it can tell us a lot of different things. It can tell us how robust the strategy is. It can tell us what days the strategy runs better. It can tell us what time. So it can give us all kinds of insights. But even then, there's no guarantee, right? There's no guarantee. It's a game of probabilities. But the other piece to it is, if we have a strategy, and our members are doing this all the time. I was having a conversation with one of our members now, and actually earlier this morning, and he said, "Don, I'm running such and such a strategy on oil, and the back test, Don, has a profit factor of whatever it was." Which, if you don't know what a profit factor is, that is another issue. And he said, and I've been running it for several days, and it's performing beautifully. It's matching the profit factor. So if you have a strategy that over 6 weeks says that you're going to make $60,000, that doesn't mean that if you run the strategy in the next 6 weeks that you're going to make $60,000. Doesn't. You might only make 30,000. You might only make 10,000. What we do, though, is as we are underway, we teach you how to run these strategies, how to write them, how to manage them. And then you measure, as you're trading, you measure your performance against the back test. And it's all about sample size too. So Mr. Chowdhury was asking about time, right? So, anybody can have a good day. Anybody can have a good week. Anybody can have a good month, right? But, be here, we've seen a lot of people come and go, AMC and all those people, right? We've been doing this a long time. So we can measure, and we suggest, that members measure their performance against the specific strategy that they're running and get a feel for what we call strategy efficiency. So maybe your strategy efficiency is only 30 or 40%. Well, that doesn't mean that the strategy is no good. It just means that, if the back test shows that you're going to make 60 grand over a certain period of time and your efficiency is only 30%, then maybe you're only going to do, 20,000. Maybe that's acceptable. Maybe it isn't. Maybe there's something that could be done better in the strategy. Maybe there's something you need to do better. And what happens is you begin to learn what, you kind of grow with the strategy, and the strategy is helping you become a better trader. Does that make sense? I hope so. But but it's a great question. So, but what I don't do, because people would draw the wrong. I like the question because it gives me an opportunity to explain and give you some insights as to what mechanical and robotic trading is all about. I can't tell you how many emails we get. We get emails that will say, they'll just send an email. What's your performance? What's your performance? What's your performance on the strategy? Purely just that, right? And we never, even have a chance to, and individual performance. Even our members, what they do, we have members that do better than me, but what they do doesn't have any bearing on me. And what I do has no bearing on them. None. This is a very individual game. So these are trading decision-making tools. Trading, and we call them robots too, by the way. And we draw the comparison to iSurge. If you're familiar, in the States here, there's a company called Intuitive Surgical. The symbol is ISRG, and they manufacture a surgical robot. And I've had the opportunity, the luxury of actually sitting in that robot. It's like a little cockpit. And I didn't do surgery on a patient, right? But in my career, I had reason to be in that. And it's wonderful technology. It's like over $1 million+. They build a special building and all that for it. But it's great. It's great. Happy to talk to anybody about it. But the hospitals, if you have it in one of your urban hospitals, Usually it's in the cities. They'll say on the billboard, such and such hospital and robotic surgery, robotic surgery. And it sounds sexy, right? It sounds sexy. And I suppose, we say robotic trading, but I'm going to borrow a phrase from Intuitive Surgical. And we do say this in our videos, and I think we say it on the website. They call their robot, it's a robot assisted surgery. The operative word there, excuse the pun, is assisted, meaning you must be a surgeon to operate that robot. Okay. Just because I know I can get in there and I can move the things around, the devices, it doesn't mean I can do surgery with it. We have trading robots. They're trading robots. They're trade assisted trading robots. And in the hands of a good, acquired trader, they're gorgeous. They will be like in seventh heaven. And a trader who hears this message will know and understand that. A person who doesn't have acquired trading skill, who has been out in the wilderness and losing a bunch of money and is scouring and searching the internet for some specific one holy grail, for some one program to buy, is probably going to flash in and flash out. And that's okay, because we don't advertise and we're not trying to, have thousands of members. And our membership, by the way, is structured so we're trying to give everybody the opportunity to say, hey, no, this isn't for me. So it's a real important point. And so I hope I answered your question, Mr. Chaudhry. And I didn't take offense to it. I hope I didn't offend anybody. But that's exactly how we look at that. I hope that makes sense. This is in general. In order to learn something, whatever that something is, whatever it is, you need to become aware. You're very welcome. You're very welcome. Person needs to be aware of what it is they don't know. If you're not aware, and I'll use I love my sister. I have an older sister who's like a champion knitter. She knits. It's big, it's big, it's very serious. I don't have a clue what she does. I don't know how to knit. About that further insight, is it a newsletter? Oh, okay. I'll save that little story. Need to subscribe to. Okay, so this is how we structure our membership. And you're welcome to call us, and you're welcome to visit stockmarketcaddy.com. We basically have two levels of membership. We have a monthly membership, $100 a month to month. We don't have sales. We don't say, join for, 5 years and get a year free. We don't do that. It's month to month. So we're comfortable with that because, and if we don't provide good value, then, presumably people would leave, but very, very rarely do we lose people. That monthly membership is meant for the investor, the swing trader, the option trader who wants to see what we do is we make a video every night from Sunday through Thursday. And that video isn't me drawing trend lines, isn't me looking at MACD and moving averages, because none of that shit really works. It's us looking at the algos and presenting the information and the interpretation of our algos. And from there, folks presumably, take those opportunities, more opportunities than one has money for, and decides what they want to do. If a person is looking to trade full-time, and they want this strategy and all the other 70 strategies, including the radar, on their desktop, we don't sell them individually. We provide them on a lease basis on an annual basis, but a person would need to be an annual member. But before you can become an annual member, we do this for you and we do this for us. The person needs to go through, regardless of experience, may have been trading longer than me, but I've been trading a while, go through what we call the Q School. We want to make sure that you understand who we are, what we're about, how these tools work. You have an opportunity to kick the tires. That Q School is $3,000 for 3+ weeks. We set up the view just like this, and we work with you each and every day, making sure that we lay everything out to you and answer all your questions. And it takes about, depending upon person's experience, about 3+ weeks, somewhere around there, 3 to 4 weeks. We don't let in more than 2 people at once. So it's very individual. At the end of that 3 weeks, you got a decision to make. And that decision is, Don, I really enjoyed it. I learned a lot. I'm going to transfer that knowledge and to what I'm doing and move on. Hopefully you stay as a monthly member, but maybe you don't. But hopefully, we've never had any issues. Hopefully, we're all on good terms, and we're okay with that. Of course, we'd love for you to stay as an annual member. And if you decide to sign up as an annual member, a couple of things. One, the annual membership is $4,000, but we will credit back $1,000 on your Q School. So we'll knock it down. Still a big investment, but we're trading futures. We're trading, it's really good value. Still need to be a monthly member. And then at that point too, our programs will only run on TradeStation. So you don't need to be a TradeStation user during the Q School, but you do need to be a TradeStation user to be an annual member, because they only run on TradeStation. And not to knock any of the other programs, but we use TradeStation for a host of reasons. And that's how we structure it. And if you think about it, we don't advertise. So it's, if you came by here, and you caught us, it's kind of a miracle, because, and this is what we do. Now, we did come out of that little trade, right? I think we made 250 and went on. It turned out to be just a little dip, right? It was just a little dip. And by the way, we use all kinds of different charts with Swing Machine is our flagship product up here. And we use this. It does not use moving averages, by the way. This is the MACDs and everything is not up here. So don't think that. We wrote this 20-something years ago with very, very slight modifications. Now, when this is on your desktop, though, we have members that we run at 135, and there's a technique for trading this, but other members run at 2 and 7, or but you can configure it the way you want. You can use this to trade stocks. If you have, by the way, if anybody's coming through and you want us to plug in a stock or a market on an interval of your choosing, including Bitcoin, let us know and I'll plug it in right now, and we'll and I'll do it a few times. I mean, I'll do it, whatever you want. It's very, very good. When we look at Swing Machine, the 5-minute went long 35 5-minute segments ago at 36.69. At what time? 9:05 today, and the trend is up. This tells us how many trades there have been since 4 a.m. There were a few trades earlier today. If you had taken that trade, you're up $2,100. If you traded a mini, you traded a micro, you're up $220. Trade 10 minis, you're up 22 grand. And we certainly do have members that trade in bigger size than me, that's for sure. I trade just one mini. or like 5 micros. Just don't. Years ago when I first started, sure, I was pushing 5 and 10 and ridiculous amounts of contracts around and biting my fingernails and getting myopic vision and being stressed and angry and everything. I was like, this is nuts. So there's no reason. I don't need to do that, and I don't do it. Just don't do it. I don't need to. So it's just, one mini contract. Sometimes on the NQ, I might go 5. We'll do some hedging. This is a great tool to do hedging. And we can talk about why would you hedge? Option traders know option traders hedge all the time. It's a great way to go. On the 1 minute, while we've been here now, we came out. This is the trade. So we started broadcasting when this trade was in, or when it went in. I think it went in after we started, and we came out with $250. Had we stayed in, we're up $1,000. So that's the individual nature of this too, right? So we have members that were running, and they probably did stay. Some probably did stay in, but we're getting done what we need to get done. There are 24 trading in futures. There are 24 trading days if you count Sunday night, so you can do the math from there. And we're not money focused. We're not. We're after profit factor. Mr. Chowdhury, do you know what profit factor is? Now, if this machine goes into a short, it's going to exit the trade, probably make more than what we did. I could have let it run itself out, but I chose to intervene, which is fine. But we turned off the short, so it won't short. I don't want it to short if the 5 minute is long. Rather not. Risk to reward. It is, but it's a very specific way of how we keep score. In golf, you have a handicap, but golfers will keep track of how many greens they hit, how many fairways they hit, how many sand saves, so they know what to work on during the week. We keep score on something called profit factor, not the money. And how does that work? Let's say a person traded last week and they had gross profits of $10,000. And let's say they had a gross loss of $5,000. So they netted $5,000. Let's say the next week they have a gross profit of $1,000. They have a gross loss of $200. They net $800. So 1 week you made 5,000. The second week you made 800. Which week did you trade better? Do you know? And why? Okay, I'll jump in and answer. Most folks will probably say, and we ask a lot of times, they'll say, well, I made $5,000. So, and that's how I keep score. A lot of times I'll ask people how to keep score. They don't even, sorry, can you come again, please? Okay, so what we do, what we're asking is, which week would you have traded better? So you don't want to keep score. If you are keeping score by the money, this may sound like heresy because everybody keeps score by the money, but everybody doesn't do what we do, right? So everybody keeps score. Why? How else do you keep score? We don't keep score with the money. If you are keeping score on the money, you are playing into Wall Street's hands, and you're going to have a hard time because you're going to be subtly, whether you agree or don't, whether you know it or not, you are trading greed and fear. You are. So we work with our members from the get-go, and we ask them, please, please do not, you can be aware of the money, but please do not keep score by the money. Nobody will call me and say, I made such and such. No, no. I'm glad you raised that. Mr. Chowdhury says more winners than losers at a better risk to reward. Nope. So this is the deal. Say you're playing golf. I'm going to keep with the golf theme. This used to happen all the time. I meet up with my buddies to play golf, and we're on the first tee, and one of my buddies says, last week I made $20,000. Okay, well, I'm not rude. Oh, that's good. That's good, right? But I'm thinking in the back of my head. You're thinking in the back of your head. Okay, he won 20 grand, but how much did he lose? Right? He doesn't tell you that. No one ever tells you that. How much did they lose? They don't know. Then you'll see on the internet or online, there's someone in particular, and he'll say that I have a 92% win rate. I have a 97% win rate. I'm, 9 out of 10 times I'm winning. Okay, well, that doesn't matter either, because the reality of it is you could win $1,000 9 times in a row, win $9,000, and then on the 10th time lose 30 grand. So it doesn't tell me shit. It doesn't tell you anything. And then you get the person that says, well, I make 10% a year. All right. Well, on what? I mean, are you Warren Buffett? 10% on billions? Okay, I get it. That's a pretty good metric. 10% on 100 grand, you made 10 grand in a year. I made 10% of my option. It doesn't tell me anything. It doesn't tell you anything. So this is really, really important as a trader. And you got all these people, that, call themselves traders and don't know how to keep score. So we'll go back to the example that I gave. The first week, 10,000 divided by 5,000 gives you 2. A profit factor of 2. That means for every dollar you lost in week number 1, you made $2. Oh. Now, if you are flipping coins and managing your money properly, you should have a profit factor somewhere between 0.9 and 1.1. The only one who's making money is the brokerage. But if you are below 1, you are losing money. You're running a losing business. If so 2 to 1 is fine. The second week, though, was, remember, I think a gross of 1,000 and a gross loss of 200. That's a profit factor of 5. So although you only netted 800, you traded much better the second week because you made $5 for every dollar you lost. And it's palpable. You can literally feel it. Now, your profit factors as an individual trader will fluctuate from day to day, from week to week, but it's how we communicate. So our members, when they talk to me, they'll say, Don, and we have a member, David in Germany. In 1 week, he had a profit factor all week of over 80. Now, I don't know how much money he was trading, but you can do the math. If he lost $100, he made 8 grand. If he lost $1,000, he made 80 grand. It probably was the latter because he was, high as a kite, which I cautioned him. He was euphoric. Like, Don, I can take a couple of months off. I'm like, go ahead, take them off. So very, very important. So many people are out there, so-called traders. They want to show you the MACD. They want to show you the trend line. They want to show you the parabolic stops. They want to show you this. They want to show you that. Take a cruise with us and we're going to go here and and watch me trade. Look at this. It's just, we're teaching folks how to trade as a business. Nobody is doing that. That's what we're doing right from the get-go. And, we came out of that trade really early. Okay. And this is what will happen if you're trading well. And if our members are trading well, what we love to hear them say, I left so much money on the table. God, I left so much money on the table. That's great. Good. You will. You should, if you're trading well. I hope that makes sense. So we write all kinds of programs, though. But thanks for your questions, Mr. Chowdhury. And it stimulates and makes it interesting. And but that's a little bit about who we are, what we're doing, right? So, but you've been watching, and that's what's underway. So it's the way we trade is fairly boring, and I always say this: boring is good. It is. Stock Market Caddy keeps my life a little interesting. I get to meet a lot of folks. I learn from them, and well, you're very welcome. Where are you checking in from? Are you here in the States, or are you in India? We have folks in Budapest, Germany, England, all over Canada. I think we have one person from Australia. Pakistan. Very, very good. Crazy, isn't it? Crazy. The world's getting smaller. Well, thank you for your questions. And I'm going to, okay, beautiful. So I hope, some of the answer to the questions, for whatever you go to do, makes sense, right? So what we're not, now if you're investing, you're investing and not going to be making the decisions or using the tools, just oversight. Yes, here in the States, you'd want to get somebody who I am not, but you would want to get somebody who's a fiduciary, who look after hopefully your interests ahead of their own. That's basically what that means. And then, they, deploy capital to whatever. We do invest ourselves, a longer term, but this is, and we're not just day trading, we're intraday trading, right? We're using leverage and trading intraday. Thanks for your questions, though. I'm going to take a little break. I'm going to be here. And anyone else have any questions on what it is you're seeing, what we're doing? I guess I should probably draw a little arrow here, because see, Swing Machine is doing, I'll circle this here, is running its program right here. This is it here. Oops, I'll make that yellow. I think it's stands out a little better. Here we go. So this is Swing Machine's trades right here. You can see them. It's all today, right? So if you had taken any one of them on that interval, that's how much you would be up. And then this is what, in essence, we have done. And so I'm not in competition with anyone else. I'm actually in competition with the machine, with the program. Some days I help it. Most days I'd probably do better to stay the hell out of the way, But it's different. Okay, you're welcome. Swing Machine results are for the day, or just the trade? Or just this trade? Yeah, no, let me show you something. It's a great question. Once again, though, if you're looking to take, daily signals and take control over your monies, you do need to understand, that there are signals, and just what I said. I won't repeat all that, but let's say I want to plug something in here. I got to clean this up here. Let me just erase something here. Erase the wrong one here. See, we use the Zoom thing. Let me go back here. All right, so what I can do is let me show you. Well, I got there. Let's change the ES to here. Oh shoot. I got to come up here. I have Zoom features here. All right, so I can change it to a daily. All right, so I'm going to change the ES to a daily time frame so we can see. All right, so on a daily basis, Swing Machine told us to get short 37 days ago. Now it's ripping against that short, but it's technically short 37 days ago, and you'd be up 12 grand. You know what's one that'll make you sick? Watch. Here's Bitcoin. Now this is a 5-pack of Bitcoin. No, that's wrong. I did that. It's at. I got the wrong symbol. BTC, at BTC. So Bitcoin, Swing Machine said to get short Bitcoin 135 days ago at 39,900 a coin. If a person had done that, you would be up 103,000. Now, this is what does blow my mind, right? It's so silly. But they don't know what they don't know. I'm not going to pass judgment on cryptocurrency one way or the other. But these people that buy the crypto and hodl, hold on for dear life, and YOLO, you only live once, and we got to hodl. You can hodl whatever you want to hodl, and you can hodl your Bitcoin. But I can promise you this, that the big boys who own and hodl Bitcoin, they are hedging themselves. So if a person had owned 5 Bitcoins 135 days ago, Swing Machine would have said, hey, get short. Well, they could still hold on to their coins without selling them. They could have come into the futures market and shorted 5, and they'd have $103,000. They'd still have their Bitcoins, but they would still have $103,000 in value, or maybe they only did 2. So they could have held on to them, and they would have. But to go into any market balls to the wall long or balls to the wall short for an extended period of time and not have any discipline to get in or get out or to hedge is absolutely ridiculous. But it is what it is. Here's another one. Now, a year ago, everybody here in the States was talking about Bitcoin when it was at, $80,000 a coin. And they would say something like, the dollar is trash. The dollar is trash. All right, here is the dollar symbol in a futures contract. I got to put these back. I'm going to change this. Let me see if I can change this to a weekly. All right, I'm going to change the Bitcoin to a weekly. And let's see if I can squeeze the dollar in here. And it's cumbersome because of my Zoom features that I'm using. Oh yeah, I did. I messed it up. Shoot, bear with me. It's not this difficult to plug in here, but I've got this marked up for the Zoom to make it look more attractive on YouTube. So let me just put this in here at DX on a weekly basis. This is the dollar contract. The dollar futures contract went long on a weekly basis 64 weeks ago. When? August 6th of 2021, more than a year ago. How many dollars does it take to buy $1 futures contract? $1,800. $1,800. How much do you have? 20 grand. More than 10 times your return on money. Do you hear about that any place? On any of the financial media? Any place? Has anybody told you that the dollar value has gone up on a leveraged futures contract 10 times? No, no. They don't want you in cash. They want to sell you shit. So whatever, it's crazy. And if I was to put Bitcoin in here on a weekly basis, I think it's even worse. It's probably right about the same time. So on a weekly basis, yeah, this was in January, it's about the same. So it's ironic because I live here in Florida. So you are always long or short, or you stay on the sideline sometime. Okay, well, let me put these back here in case, bear with me here. I got a ES, Z22. I'll answer that question for you, but I've got to, oh man, here, I messed up. All right, I've got to grab this chart. let me grab this thing for a minute. I gotta reset up I'll bring it back in and I'll answer your question. See, what I do is I'm on Zoom, so we kind of write up around our thing so it doesn't look so messy. Charts can look messy, or platforms. ES, so ESZ. So bear with me a second, and I'll answer that, or try to. Okay, so I'm gonna bring this back in. I can just see if I can here. Bingo. Plug that right back in. There we go. There we go. We're good. Okay. So the question is, so you are always in, long or short, or you stay on the sideline sometime? Yes, yes, and yes. I'm a trader. I'm a trader. And I trade everything, from currency to, so. And different intervals. So I'm diversified. I'm diversified in what I'm able to do. I'm not diversified in terms of, the hogwash that they peddle around the world. I own an oil stock. I own, a utility company. I own a grocery store. We don't do that. I'm diversified in what we can do. I can trade futures. I can trade options of my own money. I can buy and sell stock. I can be long. I can be short. I can hedge. I can do it on any interval. It leads to another great question. When you think about this, okay, and these tools are tools, right? They're not a holy grail. There is no such thing. So if you are looking for a holy grail from anybody, you are looking for something that doesn't exist. And I can say this is that if you are looking for something that doesn't exist in anything in life, you are going to be disappointed because it doesn't exist. But if you want to keep looking for it, you can keep looking for it. So what do I mean by that? I equate this, another analogy. A boat captain in years gone by, as they were sailing the seas, they didn't have GPS, and they would triangulate. They would mark their position of where their boat is. They'd use a sextant. I've never used one, but I read about them, and I think I understand how they work in general. And they would plot where the horizon is, line up their boat, line it up to the horizon, and I think point to the North Star, a fixed point. And then they would triangulate to map out where they wanted to go. Their boat was where the boat was. The horizon is the horizon. And I think if they used a specific star, the star is fixed. It's a fixed point. That's triangulation. You cannot triangulate the stock market. It's not possible. You may be a fixed point. You may be long, you may be short, you may be this, you may be that. You're doing whatever you're doing. But we cannot triangulate because the market is not fixed. It's you can and you can't control it. So what is it like then, Don? Then how can you do that? Then you can't do it. You can't do it. You can't do it. That's what, yeah, yeah, okay. I've already had to grapple with all those people that told us, 20 years ago. I love people that tell me that I can't do something. They also told me that I couldn't do what I did. I'd never even had a biology degree, and I for 20 years taught surgeons how to do surgery. So go figure that out. But so I don't listen to that. A lot of times people tell you they can't do that. You can't do something because they can't do it. And because they can't do it, that means you can't do it. So don't listen to them. I only surround myself around positive people. And we got an eclectic group of folks, and they're problem solvers. So what is it like then? It's more like the surface of the ocean. You can still, when you steer a boat, yes, you would have to triangulate, how to get there. But when they're driving the boat, the waves are going this way, the waves are going that way. And they have to triangulate, or not triangulate, they have to steer their boat with or against the waves, depending on what they're doing, right? I'm told. I'm not a sailor. We have a member that's a sailor. That's more what we're doing. So the other piece to this is when I say that the market, you can't control the market, you can't. But that doesn't mean that you can't trade it. The reason why you can trade it, if you think about this, is because there are things that you can control. Now, I can have some fun, but I won't put anybody on the spot. What are those things? Have you thought about it? What can you control? And this is why you can't compare your performance with me or with someone else. And I can't compare my performance with you or with someone else. Or I can't compare it even with my own wife because she does her trading. There are things that you can do to control your outcome. But you can't control the market, cannot. So what are some of those things? Well, you can choose the market you want to trade. That's number one. Number two, you can choose the interval. You want to trade intraday? You can. You want to trade daily on a swing basis? You can. You want to trade on a weekly or monthly, or you want to hodl and you want to do it long term? That's up to you. You can do that. You can control the leverage. Some people don't use any leverage. Some people use a lot of leverage. Some use too much leverage. That's up to you. Most decide what they're going to buy and sell on a discretionary basis. They read something in the Wall Street Journal, in the Pakistan Times, the whatever. The Economist out of London, I think it's out of London, all that stuff, the Investors Business Daily, and they make a decision to do whatever they do. That's why most people are, they say 80-90% of the people who trade will lose. It's because they never took the time to learn. And they're not really traders. They're kidding themselves. And they're just, it's the entry to call yourself a trader, the entry bar is very, very low. You can fog a mirror, you can fund your account, you can anoint yourself a trader. And that's what folks do. And I'd have 100,000 followers if I showed a little cleavage. And I'm not about to do that, but that's the reality, right? I mean, come on. These guys, kidding themselves, but I'm not going to do that. We say that we're looking for mature members, mature traders. So Oh, I mean for the system, is it all the exam? But there are things that you can control. But yeah, and there's a lot of things, and it depends upon the level. But you have to be made aware. You need somebody, someone. Doesn't have to be us. You got to read it. You got a book, but you need that's part of the learning process. Trading is in trading options and trading futures. Trading period. It's like it is a chess game to us. It's a golf game. It's a chess game. It's a bit of a game. But if the extent of your learning is you learn how to play checkers as a kid, and checkers is a fun little game, little dominoes maybe a little fun little game, but chess is a much more advanced game, and can probably spend a lifetime learning how to play chess. But if you're trying to play a chess game and you got a checker moves, you're probably not going to do very well. You don't know how the knight moves, you don't know how the rook moves, you don't know how the pawn moves, you just don't know what you don't know. And most people don't want to be bothered. They don't want to learn the game. And there's not many people that will take the time, 3+ weeks, 1-to-1 or 1-to-2 max. How many people are going to do that? Not too many. I don't know of anybody actually, but maybe, or you get these other outfits, and they got like 10 people and, 10 people, 10 traders that were fired from someplace else. That's not me. So, but I mean, for the system, is it always long or short? All the examples you showed already had a position. All the examples you showed already had a position. Yeah. Again, you can these programs, Mr. Chowdhury, you can how much time daily? 1-to-1. Okay. What we do is this. We've done it a number of different ways. So it depends on a person's schedule. So in time frame. So we have a person that's with us now, and he may be listening. He's in another part of the world. He's 6 hours ahead of me. So what we've agreed to do is we're connecting every day, every other day for 1 to 2 hours, and or over the weekend if necessary. And we're working with his schedule. That's what we're doing with him. And he's actually, he may actually be hearing us now. We had another person that he had so little time. I didn't even know, and he's an annual member now and doing very well. I didn't even know how he had time to trade. So we had to do it, in the off hours, and had to do it on the weekends. So we just took whatever time was necessary. We have self-paced education too that are on video, but we want to do it. We want to give you the personal instruction. We had another person who he's actually a software engineer, and he's doing really well. And what we did was we connected for 1-to-2, no more than we didn't do more than 2. I don't want to talk at somebody for 8 hours a day, but 1-to-2. So we're prepared, we'll take whatever time is necessary, but, we'd like to be able to touch bases with the person for 1 to 2 hours, ideally before the market's open. We control the view. So, and you're not watching through YouTube, you're watching through Zoom, and we control the view here. And what we do is we try to stay pretty much on the same market, but we can change markets. But we're going to trade different systems that are really going to challenge you. And our thought process there is we want to lay out a buffet table of choices, so that when you finish the Q school, you can take that information and go and but you'll know what you want to trade and what you want to do. We don't think it's a good idea to come at you and say, this is what you should do, and that doesn't work for you. And then, well, you should have done it this way, or you know what, hey, let me show you this, months later. Why not lay it all out for the person so that they know it's there, they know what it's about, and then they can go from there. And it takes about that long. I hope that makes sense. Now, we've had all kinds of different experiences, mostly, positive. We've had folks, who have been trading longer than me. You know, um, we have a gentleman. He's a rancher and a cattle person in Iowa, and he's been trading futures his whole life. And his daddy's been trading futures, um, and so he took to it like a duck to water, though. I mean, he was off and running. So it just depends. Hopefully, I answer that question. Great. Thank you for your time. You're very welcome. You're very welcome. Have a great weekend. I'm going to take a break. We're going to let everybody, I'm going to let everybody kind of come and go and watch. Let's get a beat on these markets here. Yep, we're beautiful. We think that near term, at least we're talking about the S&P futures here. We think that we're hitting, calling out a near term low. And we think that we're probably between now and Thanksgiving, the middle part of November, that we're probably right. And we don't trade on this. And I'm not recommending or suggesting anybody do anything with their money here, but we're thinking that we're probably going to run up to 3,900, 4,100, somewhere around there. And that maybe the near term low might be in for the remainder of this year. We don't think that the all-time low is in here yet. We might have still another turn down. These interest rates that the central banks are cranking up and the strength of the dollar are creating, economic hand grenades, time bombs in the future here. And so we think that the world markets are gonna feel this months from now. It is what it is. We didn't create the game. It just is what it is. So you can see here the strategy when short here, it's actually an exit. It's an exit. And if it turns around and goes long again, if it does, the machine will put the trade in and will be long again. It appears to be just a little bit of a dip. There was a little, yep. And there's the trade. The machine just put it in. We're long again. Now we've programmed it just to go long today for very specific reasons. And we want it to be consistent with the signal down below. Now we know that the average run up now we've gotten some positive run-ups, but we know over the last couple of weeks the average run-up is about $390. So if we get up 390 or 500 or 600, we got to make sure that we either come out manually. And see, this is what's different is where when we intervene, we're not putting the trade on. I'm not taking the trade off for a loss. I don't have to grind on it. I can talk with y'all. But when I intervene, I'm taking the profit based on the data of the last couple of weeks for this particular strategy on this particular market. And so it's psychologically, it's a nice way to go because I'm just sitting here, just taking profit. If it gets a losing trade, it's not my fault. It's the strategy's fault. It's the market's fault. It's not my fault. And I don't have to stress on it. Now, I do want to, be here. I want to make sure that, the power stays up. I somewhat joke, but I don't want the power to go down. We have backup systems and everything. But does that make sense? If you have any questions, oops. There we go. Now, what I'm going to do is I'm going to set, I want to play a pretty mean game here. And so I'm going to I've set a stop manually. You see the little asterisk that's up there right beside the ESZ22? That little asterisk means that there's a stop been put on. And it's not shown on the screen, but I put it in manually. And on a product, the TradeStation calls their matrix. And so if this comes back and I'm guaranteed to make $25, guaranteed. Now, if I want to intervene and take the profit, I can still do that. But we're going to see if we can let this go. But I won't suffer a drawdown at all. And again, you want to, we're not trying to get it all, right? And we get 20 days, a month. Do you have the patience? Do you have the discipline? Patience, discipline. Do you have the risk capital? Do you have realistic expectations? Do you have some stuff that need to be worked through? Do you have thoughts? And we say this to everybody that goes through the Q school. We know you've read different things. We know you've talked to different people and different things. And, we want to hear what that is. If there's something in the back of your head, just as, and that's what's so great about this little YouTube session. It's your opportunity to ask the hardest question you have. If there's something, someone's planted something in your head that is, precluding you from trying, it doesn't have to be with us, but with somebody, ask me. I'll tell you. I'm not going to spin it. We have a thought process here that whatever people decide, if they decide to join us, it's going to be for the better. If they decide not to, it's for the better. If they decide, just to go through the Q school and not become an annual member, it's for the better. It's pretty low key. I just think, right. So we're up $350. The average payout, the average winning trade here over the last 2 weeks is $380 some odd dollars. So what do we want to do? Do you want to take the profit? The probability is, though, that we should, right? So what I'm going to do is I'm going to move my stop up, and I'm going to at minimum capture 300. Is that okay? All right. So I'm going to let it run, but I got a stop loaded in, and we will have a minimum of 300. No stress, not grinding. I don't have a bunch of moving average crap on here. I don't have MACDs. I'm not reading candles. Oh, God. I trust me. I see in here the stuff that's out there. It's awful. Boom. It's out. Took 300, right? Took the profit. Thank you. Time to use it. I mean, is US given it's difficult to monitor all data? Yeah. Yeah. One last question. How many hours ahead or behind are you? I don't know in Pakistan, but where you are to New York time. I'm not in New York. I'm in Florida, but it's Eastern Standard Time. So how many? So give me a feel for, are you ahead of us, or I think you're ahead of us. I'm assuming you're going to be trading American market. I think you can, right? People do. I don't know how many hours that is. So if you, doesn't matter. So, but your time zone. So I can tell you, it's 9:30 p.m. here. Okay. So that means you're it's 12:39 here. So you're 9 hours ahead of us, but I prefer US Treasury. Yeah. So you actually have really your clock is set to Eastern Standard Time. Yeah, you're in a good spot. You're in a really good spot. +5. Yeah, you're 9 hours ahead of us. So this is what I think futures are open, as you know, almost 24 hours, right? They're down for a little bit, Eastern Standard Time for an hour, and I'm happy to go over that. But normal public hours here in the States are stock market stocks are 9:30 to 4, right? But futures are open around the clock. And I consider the futures markets to open. I consider from 3 a.m., certainly 4 a.m. on to be like normal session, but to be a really good time to start monitoring the markets. And from 3 a.m. to 4 a.m. Eastern Standard Time. Yeah, exactly. Yeah, no, you're in a great spot. You're in a great spot. You're in a great spot. Yeah, you got favorable hours to do this. And so I think and I think there are markets within markets, right? So you have this big, so from 3 a.m. to 8 a.m., I think it's a wonderful time to trade. The US markets, really, the futures markets, a lot of times, and I will get up and look. I'll take a look at the markets, and it will be up, but not every morning, but I'll look usually at 4 a.m. The reason being is the US Treasury has a war room, and they open at 4 a.m. And directives are going out to the hedgies and everything. So the hedgies really start in earnest, with Europe around 3, certainly by 4. And I think from 3 a.m. to 8 a.m., it's a wonderful time to trade because the American public, they're not up. The financial media isn't up and screwing with things, and they're not around. So that's a really good time. And if you can get in there and get done what you need to get done, a lot of time you can, then you take the rest of the day off. Then from the next session, really from, you want to take 15 minutes, say like, 8 or 8:15 to about 11 Eastern Standard Time. Now, during that time, we don't follow any of the noise, right? I don't have a TV in my office. I don't need it. But I am aware that at 8:30, 10 o'clock, there could be some economic numbers or anything coming out, any events that could move things around. But that's a pretty good time. That's when the most liquidity is in the market, but they're pretty liquid even in the early hours. From noon, from 11 to 1, markets get very choppy. And we did okay here, right? But from 11 to 1. And then from one, but we try not to trade in the last hour. So it's like 1 to 3, but 1 to 4. And then the market shut down, then they open at 6, and then that's not a good time. That isn't. Now I have Swing Machine up and I am programming and doing things, getting ready for the next day, doing what we do. But unless there's some sort of event or spike that I see on Swing Machine, from 6 p.m. to 2 a.m. is really kind of a shitty time. So it's really not, and we've measured that. Even the machine, it's just that in the markets are thin, so it isn't a very good time. So those are the times. But where you're ahead, yeah, you don't have to get up that early. You're going to be up. You're going to be up before the American people are up, and that's it's a great opportunity. Early bird gets the worm, and I get up early to get done. And we teach get in early, get out early. Get in early in the week, get out early in the week. Get in early in the day and get out. So we're not just measuring profit factor, but we're also measuring time in the market. So it's almost a bit of a game. We have members that will say, like, Don, I have a profit factor of 6.8 this week, and I was in the market 18% of the time. It's like okay, it's like the cherry on top. You try to so that's how they talk, right? That's what they're doing. They're not talking about, I think Snap is, Snapchat or whatever the hell. I think it's going to do this and I think it's going to do that. And, and Tesla's coming out with a new car. Yeah, it's nonsense. Midday to midnight, my time is 3 a.m. Well, that's midday to midnight. Well, that's perfect, right? That's beautiful. I wish I had those hours. That's great. That's a great time. That's a great time. The reality of it is you're not going to, but I never sit down. So it's kind of late for you. I would just say this. I'm here almost all the time, but I got a treadmill in here. I go out with a dog. I get exercise. I play golf. I fly fish. I have other interests. But I love the markets, but I never sit down. I'm prepared to be here, basically from those hours, more or less. But I very rarely, usually I'm sitting down with an expectation of being trading for about 4 hours and then stopping. But reality of it is I may sit down with that expectation, but I may be done in 15 minutes or 20 minutes, and then I'm done. So I don't sit down and say, like, okay, well, I blocked off 8 hours and I'm going to just keep trading right up to the 8 hours and I'm just going to make everything I can. It's always here. It's always here. I don't do that. You want to stay fresh, and so it's very, I hope that makes sense. Getting late for you, but it was nice chatting, and check in anytime. We have other systems that do some timing. So we have another. This is for our swing traders, the nightly video. We have a tool called the Nicholas timing model, and it's based on the underlying, and it's based on the VIX, and it's based on the 10-year Treasury, and it gives some really nice things. And it's been long. It's been long. So. But yeah, thank you. Thank you. We're going to we'll let YouTube run. I'm going to need to grab a lunch, but if there are any other questions, I'll be back in and out. What we're running for the benefit of our members. Now, our members are come in and out of Zoom, right? YouTube is YouTube, not good quality, and it's on delay. Zoom, we've been using Zoom before Zoom was Zoom. It's, but they have everything. The folks that are here watching as members, they have everything on their desktop themselves. The nightly members don't, right? And they don't come in. They don't have access to come in and see our Zoom, but they get to see the video at night. But they will come and go. So the program that we're running today, we're running the swing machine, the 1 minute swing machine, and we're running it in the direction of the 5, which has been long. It's probably going to be long the rest of the day, so it's pretty easy. And that's what we've been doing, and we've been scalping it a little bit. So, Mr. Chaudhary, it was very nice. Thank you for stopping by. Incredible to think. And see, the other part too on what we're doing, Susan and I said, well, how come we didn't do this before? You couldn't. You couldn't do this before 2000. You couldn't do it. The brokerages weren't set up for it. Technology wasn't set up for it. But in 2001, 2002, I'm like, Susie, this is when we want to do this. We'll never look back. This is when you want to do it. I think most people are missing. It's too bad because they're, the Robin Hooders and buying and selling stock, they're in it, but they don't, they're not pushing the envelope in terms of technology. They're just not. So, and once again, we got stopped out on that last trade. We made 300, and look what the machine has done, 900. So, this is where, I haven't, the machine has done a hell of a lot better than what I've done. If we had just let it been a little more patient, but that's okay. Now, when folks are in Q school too, by the way, so we have a gentleman that's in Q school, right? And so we get him our scorecard. We have a scorecard that that we provide, and he'll be keeping his score, and we're going to try to help. Every person's got a different trading personality, so we'll try to help match some of the tools with the trading personality that we perceive there to be, right? So we try to work around what you're already doing, what you like. And in those first few days of the Q school, quite frankly, we show you how to use Swing Machine, but then we kind of watch and listen and try to get a feel for what it is you've been doing. And we'll try to help around the edges with some of the traditional tools, which you will have been using traditional tools, and we can usually help you use some of those and a little bit better. And then we start really moving forward. Again, we want to say thank you for stopping by. You're welcome to hang out. If you have any questions, I'm Bagadon at Stock Market Caddy, and you're watching swing product called SMC for Stock Market Caddy, the Swing Machine Plus. This is you might think of it as a digital ticker tape, and it is trading. It's trading itself. It's a trading robot. And just to share with you, this is the S&P futures. You know, you can do this with stocks. You can do it with options. It isn't using moving averages. It's not using MACDs. It isn't using that stuff. It went long at 9:05 a.m. and you'd be up $3,500 on that trade. If you're trading the 1 minute, you would have done, we've done 1480. We should have done much better. The machine did better. We're in competition with the machine, not with the market. And the VIX, by the way, the 2 minute VIX went short at 11:30. For the benefit of our members, we have a member that has been getting long and short the NQ off the VIX on a 2 minute basis all week, and it's just doing great, off of a swing machine. So, and now it is trading. We've already come out of a trade. We got stuck. We stopped out. The machine would have continued on. So, but we're only playing it to the long side. The machine is only playing it to the long side right now. This is the program here. It's running here. This paint bar that's on these bars is matching the swing machine. There's a lot going on over here. We call this the ball flight. This counts the number of trades. And then this measures fear and greed on the interval in which you're on. And this can be traded in and of itself. And all of this can be, programmed. It can be programmed together. It can be programmed individually. So they're very strong programs in and of themselves. But we're not going to take, you're going to see, it'll say short, but it isn't going to short. We've turned it off. It will serve as an exit, but we've turned off the short. So we can do that, right? You can do that. You don't have to, get in front of a wave or anything, and we can do this on multiple markets. And so we're trading, we trade futures intraday because they're leveraged and they're highly liquid and they're open, great hours. And it's just very conducive for this style of trading. If we're going to trade stock, we're probably going to trade stock on a position basis overnight, an extended period of time, because it wouldn't be capital efficient to trade it in during the day. It just wouldn't, using way too much capital. And we're going to use most likely options to define our risk going out. And we don't trade it. Now, if we have position trades on that are going out, days or weeks, we're not watching those positions intraday. Why would we? We wouldn't do that. And I don't think it's a good idea. If you're a daily swing trader, you should probably just be paying attention, to the daily closes, and other than on the day that you think you're going to take a profit and you want to fine tune it. If you are an investor on a weekly basis, you probably should just look at the markets on a weekly basis on the weekend, look at swing machine, how it's positioned in for 15, 20, 30 minutes and call it a day. Don't watch the market intraday, and don't watch the market day to day. I mean, if you want to do that, then you want to trade at those intervals. Where people make mistakes is, and as we go further out, we reduce our leverage and we define our risk. You will see these so-called stock pimps on the financial media networks all over the world, and they'll be happy to tell you with wherever any particular market's going to be at the end of the year. It's always higher, right? It's always higher because they know they got to promise, hire markets to get you money, get you to send them their money. So they'll tell you whatever you want to hear, and then they get you money. And but they'll always say is that oh, the S&P is going to be at 5,050. Come and they got their black goggles on, the glasses. And they look smart. They look impotent. They're on TV. Oh, that guy must know something. And oh, honey, let's send him our money or let's get in the market. And then he'll always end it with, but of course, Judge Wapner, who's the host on one of the shows over here, of course, Judge Wapner, I can't tell you where the market's going to be, later today or tomorrow. I can't do that. As though, it's easier to say where the market's going to be a year from now or months from now. If that was the case, I can buy an option that expires next Friday for X amount of money. If I want to buy an option that expires 6 months from now, it's going to be many multitude higher. It's going to cost me much, much more. Why? A lot more things can happen one way or the other. So it's just financial news they're the originators of faux fake news. They absolutely, Wall Street and Madison Avenue have merged into one, and then they've taught everybody else how, including the Chinese, how the game is played, although they're probably a little more command and control. But that's the reality of it. Okay, we're hitting a little dip here. You can see it on the 1 minute, 3 minute. If the 1 minute goes short, um, the machine has been programmed and there it is. It's lighting up now. And so that condition needs to stay true for 1 full minute and then it will short, but we won't go in it. The machine has been programmed not to take the shorts right now. We're not going to go against the 5 minute. The 5 minute is long. We're going to do much better. Could we make some money in there? Probably so. Are we going to get it all? No. So we don't need to be that active. So we're not going to go against it. Um, you'll notice trades that go against the 5 minute. Um, you can make money doing it, but you have to be very, machined. Um, we know that the average winning trade on this is about $350, 380 thereabouts, just under $400. So usually they'll be a little bit shy of that when they go in. There it is. There's the short, and you see it on the screen. You do see the trade went in, right? And but the contract did not go in, right? We did not arm it. You got to arm it, and we didn't, right? We turned that part off. So and so it's a counter move, and it's actually underwater now. If if it confirms long, we will get a trade long here, but we'll see. Markets have gotten a little bit thin here on this early Friday afternoon. If you have any questions on what it is you're watching, don't hesitate. I'm bagging on at stock market caddy. Okay, there it is. Turned right around, and that little short would have been just a donation, and we are now long. I didn't do that. The machine did that, and now if we intervene, we've intervened a few times. We haven't helped ourselves. Would have done better to sit on our hands. But the average payout is about $480. We know that over the last couple of weeks with the volatility that we're having. So if we get up there, we at minimum we want to make sure that we lock in a profit. I want to keep an eye on it. I want to make sure I don't lose power or anything of that sort. And anything can happen at any time. That's not usual. We've been doing this a long time. We have battery backup. We got backup systems, and so we're covered there. Okay, we're not going to be too greedy. We missed an opportunity. I stepped out for a moment, and we had a $300-400 run up, and I wasn't here to take it. So we're running up against a little swing high there. You can see it at 30. Looks like 37.44, and maybe we punched through. But we've had a nice run, and so I intervened and took a profit. If it goes short, and she'll cycle back around, but we're not going to take any shorts today, not right now. And it's 1:41. We'll either be stopping for my lunch, and or we'll stop at 3. So all the trades have gone in, haven't gone in by computer, by the program. They have managed the losses. They have managed some of the profits. The only intervention I have done is to take some profit. And we did the good 16, 15, 90 since about 8:30 this morning. No stories, no narratives, no bullshit, no drawing trend lines, no MACDs, no moving averages, none of it. Okay, this is going to be our last order, and we may cut it pretty close here. We're gonna we've been running here a lot longer than I thought, and so we'll try to finish on a good note here. And we're going to disable the strategy. I'm going to disable it, hopefully. There it is. Okay, and we'll close the position here in a moment or two. We'll try to finish with a small win. If those of you that are on YouTube or passing through YouTube, you have any questions, you can put them in the chat. You can explore the website, and you're welcome to call us during the week, on a weekend, 9 a.m. to 9 p.m. I think if we get back up to 3754, that second, that little swing high that you see on that chart, see it right over there? As we run right up through 3754. We get above 3754, they'll probably really squeeze them. And so we'll see what we do when we get up there. And we'll probably close into the trade when we get above. See if we can get up there. It only takes, these are only minute bars here. So you need to be a little bit patient. Tucking right up here. We can see the swing point, right? Let me bring this into view. We'll try, let's do this. There you go. And let me widen this out. So we think we can get right up to here. And if it clears 3754, it will shoot up. There'll be stops up here. And when they start covering their short positions, we will sell it to them. And we could pick up, a little bit extra. You do need to have, when you're running a trading robot, you do need to have some trading acumen, acquired trading skill. We're constantly working on ours. It's it's a skill. It's an acquired skill, even though we're using robots. Just makes it life a lot easier. Kind of like a riding mower, right? You can get a push mower if you want. You want to go out there and in the hot days and push one of those clankers around. Not much fun doing that. Or you can get yourself a nice big rider and ride around. I got a landscape. I don't do either one of them. But so if you're into the market and you're pushing things around, like having a push mower, you're working real hard, folks. You're working real hard. And I hope it's profitable for you. But at some point, when you hit that wall and you just want to take your clubs and throw them in the lake, don't quit the game entirely. Just think about what you've done. Think about what you've learned, if anything. A lot of these subscription services, they don't spend any time with you. They're not interested in teaching you anything. We will do our best. So let's see if we can get up here, right? We want to capture that 37. See that little red tag? That's this swing point right up here. We want to get right up into that. Notice, see how, former resistance, see what it did here? Hit this little swing, bounced back, pulled up, and then blew through. Established a new range, came back. What did it do? Pegged this again. Former resistance became support. And now what's she doing? She's going right back. And she's gonna, now we don't know if it's gonna go. If she starts to pull back, I could take profit, but it looks like she wants to go. We got the 5 minute at our back. She's got a real good chance. She might pause here a little bit and see if she can get up here. She goes to 37.54. She's probably going to go to 37.60, 65 anyways. And then we'll dump it, and that'll be it. take us right to about 245 or so. See if we can finish with $2,000, maybe. I'm not going to arbitrarily target that, but we have the prospect for that. 24 trading days in a month, $100 a day. Hate to equate it that way, but it's $2,000 a month. 200 a day, $4,000 plus. You get a couple of days like this. Maybe it's just a couple of days a month. You don't have to play all day, every day. You don't. Okay, we're gonna close this position. Not gonna be greedy. We're done. Let's see what we got. We're in with 1701. I want to thank you for stopping by. If you don't have any questions, I'll hang out. You're in a little bit of a or you have a little delay here of about a minute or two. So I'll hang here for a little bit. And if there's not any other questions, then we're gonna shut down. Have a great weekend. And be sure to make sure that we have your email, because sometimes we will do a broadcast and it'll go out to private emails. So if we don't have your email, you won't get a notification. And if you're on YouTube, you want to be sure to subscribe. You want to be sure to hit the notification button. We appreciate the likes. We appreciate the retweets, and we'll be more apt to do some of these spot views. And sometimes we do it really late at night. You never know when. It's just whenever we have an opportunity. We're not trying to hand out the fish. We're not trying to make any claims. We're just trying to show you how we go about getting the fish in the boat. Have a great weekend.